Greetings, Dr. Jeffrey Scott here. This is my MRI Pro update for the market ending 12/31/2025. Doing this on New Year's Day. Happy New Year's, everybody. Hope you have a safe and healthy New Year's and ready to get back to work tomorrow or next week. Um, it was a tough day. I mean, the market's just drifted down. It really does beg the question, is it time to get defensive and maybe even short? Again, Jeffrey Sky is my name, marketmripro@gmail.com. Google group is Top Down Trader, and website's marketmripro.com. This is for educational purposes only. Any recommendations I might make should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stocks I mention in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I've got tools in multiple platforms, but today we'll be using the Market MRI Pro app. My Google group is called Top Down Trader. How do I join? You just go to Google Groups, click All Groups, click Join Group, and then decide how you want to be notified, and you can control your participation. If you want to leave, I won't even know. Thanks again to those that attended the live session on Tuesday, put on by Tip Plays. Thanks a lot to Sean, Ashley, and the team there for putting it on. We had a great showing and really enjoyed doing that. As I announced at that meeting, I've announced in this venue and on the Top Down Trader, there's a price increase that came in today, pushing Market MRI Pro up to $26.95. And that includes predictive tools, the data, and everything that I show you on these videos. I throw in my TradingView package, and actually we built it in so you can flip-flop between TradingView and Market MRI Pro. Why? Because TradingView you can trade from. You can't trade from Market MRI Pro directly to your broker. TradingView will have data sets that I don't have, such as international, and TradingView is an open platform, and all of us have indicators from a lot of different folks within TradingView that you might want to combine. I did announce that I'd be doing a webinar on Saturday morning, partly why I'm doing this today, and I offered the whole package for $14.95, and year 2 will be billed at $4.95 as part of the offering I made on TickBlaze, and after that it will be market determined. What do I mean by that? My goal is to keep it at $4.95, but if my data costs significantly increase, the price will have to increase on an annual basis. I'm always committed to ongoing training and support, and so I will put this link inside the remarks section on YouTube. And you can see it's basically tinyurl.com, then MRI 0103-2026. We'll do in the next month or so a quarterly mentoring session. You always have access to me through the Google group and my market commentary. And then as I showed the folks during the last live session, we've made it really easy to share layouts, and you can have access to all my layouts as well. Obviously, today is New Year's Day. No earnings today, no earnings tomorrow, no news today or tomorrow. But things start in earnest, especially on Tuesday, where the earnings start to pick up again. And as we go into the end of, let's see, we go through here. Yep. The end of the second week of January here, you could see we're really starting to launch earnings season with a lot of the big banks kicking us off, and probably Delta's in there somewhere as well. All right. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. If you have any questions about what I do, the programs, email me at marketmripro@gmail.com. If you have any issues with the program, any bugs, anything you find, coding at marketmripro.com. And please consider joining my Google group. I don't anticipate this being a long one today. I think I want to make some points and then let you be with your holiday, and I'm going to go have my holiday as well. but I do think there's some changes to be aware of. If we look at the statistics on the day, volatility was up. Everything else was down just a little bit. That included the dollar, Bitcoin down 0.36, and the major indices were really in a small range between minus 0.62 to minus 0.83. More concerning is probably this group right here, which shows that they all finished at their lows of the session. That's a bearish, to me, that's a bearish feeling thing. Now, over the week, small caps most underperformed, down over 2%. Qs were down 1.25, diamonds 0.75, and 0.89 on the spider. Now, that's a 5-day change, so it probably reflects a couple of days of the prior week. Other things that are concerning is we've now gone negative on the new highs minus new lows at 52 weeks on the NYSE. We remain negative on the NASDAQ. If you look at participation, these three indexes form their own sectors and industry groups. All the sectors were negative. Most of the industry groups were negative. Only 8% of stocks on the S&P 1500 were up on Wednesday. Only 35% of the NASDAQ and 18% of the NYSE. If one looks at the S&P 500 sectors, you could see everything was down, and everything was down between 0.5% and 1%, with technology leading to the downside. So there was no winners in the S&P 500 sectors. And if you look at my themes, one theme was up, and that was biotech. And everything else was down except for cannabis, which was flat. The leaders to the downside, silver, gold, continued their sell-off after their climax runs. Software, Chinese discretionary, EV, a lot of things were down over 1%, even though the sectors and the indices were much more muted. If we go and we look at the timing model, I drew a couple lines that I think I'm watching and maybe tell us a story. So the first thing is, no surprise, with the weakness over the last 3 days, and it was subtle. I mean, it just opened down, and for the first 3 days of the week, Monday or Friday, then, and Monday and Tuesday, the markets opened and did nothing the rest of the day. Wednesday was different. We opened and we traded lower, low enough that each of my 4 short-term daily timing models, Spider, Qs, Diamonds, and Russell, have turned negative. And you can see the red lines. So now I have to look at the weeklies. And when I look at the weeklies, I see we're still long, but 3 of the 4, the bongos, which is the trending indicator, has started to go negative. So I am concerned here that this could be more than just of a run-of-the-mill pullback in an uptrend that we have been seeing over and over again. That should cause you to will cause me to get more defensive, and I close some positions. I still have a lot of cash, probably 40 to 50% cash right now in my portfolio. Now, for those that don't know me well, sometimes I'll have a stock that has a lot of profits in it, and for whatever reason, I don't want to sell the stock. I believe in it long term. It's a bad reason to do this, but I'm waiting for it to get long-term capital gains. Now, there's a good way to reduce your taxes, and that's to hold things through a market downtrend. Forget long-term or short-term, your capital gains go away. But I'll put married puts on them. I'll buy a put at the money, maybe sell a call above the current price to pay for that put or to half of that put. And that way I lock myself in at the current price and I still get a gain up to the price of the call. And I can always buy back the call. So to me, if I have a position with a put at the money, it's the same as cash because I could sell that position for cash at that price. We're back here looking at the daily, and I'm wondering if this here wasn't a false breakout because we broke out above this trend line and reversed in 2 days. And sometimes when you get a signal that looks bullish and it turns out to be a false signal, the opposite signals can be extreme. So I'm concerned, and that's going to cause me to address that, and I started to address that in my portfolio. On the Qs, forget the horizontal line. The Qs are down a downtrend. Lower highs, didn't get a lower low. So that's the only saving grace here. So I guess we're in a wedge and we'll see what happens. And we're probably in a wedge here as well if you look at the chart. So I think it's going to be interesting here. I don't think this is as easy as it was between April and the middle of October of last year. If I look at the index ETFs, start here. I'll give you the bullish and the bearish. The bearish, I already told you, false breakout coming down here to test the 50. Already broken down through the 17 and the 21 day. A bounce here would be great. We take out this line, we forget about this line. But I think short term, the 50 is in sight. We've tested it, we tested it, we failed it, we tested it, we test again. Question is, will we stop there or do we go to test the 100? And does the 100 work here as it did back here? So a little bit concerning here. No, a lot concerning here. What's the bullish case? We're just off all-time highs. We haven't broken down. Holiday low volume week. Maybe market participants come back on Monday and the market goes to the moon. That would be fine. I got to be prepared for something else. This is the Qs. And I'm going to reset this because I was playing around with it. Let me take that off. Let me put a new one on. So as I said, lower highs, but not lower lows. Probably should, to be fair, something like this and go, are we going to pull down here and bounce? That would be fine. Are we going to break through that? Not so good. Here's the 100. Same dissertation as the S&P, except we're already in a downtrend there, or what looks like could be starting a downtrend. Technically, I don't have a lower low. If I look at the diamonds, probably the best of the bunch so far. It broke through the 17, well above the 50, but it too has a sell signal, so we have to be careful. And then if we look at the Russell, Russell's at a pretty important junction here. If the Russell bounces on Monday and that 50-day holds, maybe that gives us a suggestion that the rest of the market is going to bounce as well or hold at the 50. But right now, it closed, well, let's see how close to the 50 it closed. It closed at 246.16, and the 50 is at 244.71. Well, the market's not open today, but tell that to TradeStation. So we actually closed a little bit. We closed at, again, 16 cents, and no, the 50 is at a nickel. So we're 11 cents above the 50-day moving average. A hold here would be great. If not, we'll see if the 100 holds. The rest of the market, this does not look strong, does it? If we look at volatility, oh, no futures today, so let's put up UVXY. If we look at UVXY, you could see, and this is daily, volatility was up a bit, 1.44. Let's look at the VXX. The VXX was up 0.72. Let me just make sure that the futures are not working today. Or did we change the ticker? No, this should be the VIX. Yeah, there it is. I don't know why it wasn't working before, but I'll take it here. And you can see we moved up on the futures off the bottom. So these are more short term, up 4.33%. So look, I got 17-day resistance. I got potential 50 and 200. But if this VIX is rising, that says bad things for my equities, which means cash is king or becoming more interesting. The dollar looked like it was going higher, did a reversal, and so these would be the dollar futures on Wednesday. If I say Friday, I apologize. I'm used to doing my end of the day week. It feels like an end of a week. But the futures here were up just a tad, but with a topping tail, not too concerning. So those don't look bullish. Not, they're all close to all-time highs. They're all coming into support, um, but worth being aware of. If we look at commodities, well, gold broke below the breakout point, opened at it on Monday, closed at it on Tuesday, and broke below it on Wednesday. Look at weekly on gold out of curiosity. Weekly on gold was down 4.9. Is it broken? Heck no. Could it rally from here? Absolutely. Could it come down to the 17? Why not? It's done this multiple times after its breakouts. So I think gold could have more down. I left the weekly on purpose. Now, I guess if I wanted to be bullish, I'd say silver had an inside bar. It's totally captured within the prior bar. But the reality, it's hard to be bullish on a 10% or 9.5% down week. When I talked about it on the weekend, especially on the wealth charts video, I said, feels like the climax run. And I actually drew an arrow on the chart saying that I kind of expected silver to come down. What was surprising to me was on the first day, it pulled back 7%. And that would have been Monday. But it actually closed up 4.5 on Tuesday. And I was wondering, is it just going to blow right through that top? And then, reality hit on Wednesday down another 6.61. Again, is it broken? No, it's just had a major run. A pullback to the 17 would not be such a bad thing, especially if it based a little bit before it ran again. But we will see. Oil struggles trying to get back into this wedge, failed. Natural gas has been moving higher. It dropped down heavy on Friday. This was a everything, or Wednesday, everything down session. 10-year not down was up 0.95%, and the 30-year was also up 0.67, a ways away from 5. But, does this mean that the big money guys, the bond guys, think we got inflation? Remember, the short end of the curve is very much controlled by the Fed, but the long end is controlled by the smart money, the guys that are the bond market. Okay. If we look a little further, all my wake up sounds in the morning. The market briefing, clearly we've shifted more of the stocks in the various industries, NYSE, NASDAQ, Russell, and S&P 1500 more to the left, meaning more in the lower parts of their Bollinger Bands. But if you look at the white bucket, 6 on the NYSE, 9% on the NASDAQ, 8% on the S&P 1500 and 9% on the Russell 2000, none of those are low enough to say the market's got to bounce here. It could bounce, but we're not going to get an oversold bounce. We're not oversold. If you look at market breadth, you can see both the NYSE and the NASDAQ composite are pulling back, and the NASDAQ, similar to what we saw in the Qs, it doesn't have lower lows, but it's certainly got a series of lower highs. Stocks above the various moving averages really dove this week and fell, but not to reversal points yet. Okay. When it gets to this level on the 17th, 51%, above the or 22% above the 17, I start to pay attention. We are much higher than that right now. If you look here, you see that on both of them, new high, new lows, AD lines and up down volume are low. And I remind folks that we still have an active, at least on my system, on the NASDAQ. And not everybody looks at the NASDAQ for Hindenburg Omen, but I'm a believer that we have an active signal. Now let's just take us back a little bit. And let's take us back to 2000, actually not 2000, 2022. Can't remember if it was 21 or 22. I'm mixing up my markets, but let's see. Yep, this is what I wanted to show you. And what I wanted to show you was that if you look where my arrow is, on the right, the NASDAQ composite started having a lot of Hindenburg omens. And even though, and I did a video on them and I talked about them and whether or not they're meaningful, and I went back and I do believe they mean something, especially when the NYSE today has banks and bond funds and all kinds of interesting things in it, preferred shares, a lot of energy, and the NASDAQ is tech heavy. They're different markets. So why wouldn't a signal that shows markets changing hands from the strong holders to the weak holders and potential for a top, why would it not apply here? And you could see it applies to the NASDAQ as well. This was the sell-off at the end of the year in 21. So I'm heeding the Hindi and I'm paying attention to that. If I look at my other breath tools, something didn't work on the data, so I don't have all of the Friday data or Wednesday data yet, specifically that green line, which is the new high, new lows. The one that's most interesting to me is we're missing the 31st data, is a 13-week new high, new lows. And the reason why it's interesting is it's going to be close to 0.20 on the NASDAQ. It's nowhere close to a reversal signal on the others, and the NASDAQ could still have a few more days. So I don't see imminent bounce from oversold. Certainly can be a sentiment change and more people coming back into the market. When I look at my timing model on the sectors, a couple things that I saw is discretionary broke down, technology broke down. Those are new sells. Industrial starting to break down. Real estate breaking down. That's supposed to be defensive, isn't it? There's not a lot of green on the last bars on the buy sell signal here. So a lot of breakdown in the sectors. When I look at some of my favorite stocks or widely held stocks, and I applied the same timing model to it. But one thing just to remind you, if you're not aware of, and I'll show it to you actually right here. The yellow is the 30-period WMA, which is in my timing model. And the lighter color one is yellow's a 30-period WMA. The lighter one's a 21 EMA. And they track pretty closely. So Amazon had a lousy day on Wednesday. But it's still holding above its moving averages. It's still technically in a buy signal with my timing model. Apple struggling to get above the moving averages, and here I added the 17-day as well, just to show you that some people use the 30 period, some use the 17 simple, some use the 21-day EMA. They're all very, very similar. Apple, technically it's in a sell until it gets back above these moving averages. Has not really broken down except off of this peak there. Google, probably the best of the bunch, but it actually broke through the moving averages here, and until it's a daily chart, the daily bongo flips. Short-term wise, it's still in a sell signal, but I like it better because it's above the moving averages. Meta, again, broke back up above the moving averages after the hard sell-off, but really not doing anything that interesting. Netflix going into its best seasonality time of the year, except Netflix is struggling because of a potential buyout of Warner Brothers Discovery and the potential bidding war it's in with Paramount. Tesla, well, sorry, Teslonians. Tesla actually broke down a bit this week. Still not far off the highs. These were all-time highs forever, which is amazing. Breakdown here, we'll see if we can get back quickly. Um, NVIDIA, NVIDIA looks better than the others, but it's well off of its highs. It probably doesn't help that every morning on CNBC, some guy who's talking about buy this, sell this, tells you every morning to sell NVIDIA. And before that, Mark Chaikin was. But NVIDIA holding up. There was some news about Taiwan Semiconductor turning up the H200 chips, which would be the ones that are cleared for China. Maybe NVIDIA knows something is going to happen next year, this year now, on those sales. So you think about it, these are the stocks that really drove the market. Here's Microsoft, and technically still green here, sitting right on top of the WMA, way off of its highs. At least it got back above the moving averages. But if these are the main stocks that led the market advance, what does that say about the market? If it goes higher, these got to get better, or there has to be massive continued rotation, and these will not be driving us higher. My guess is we need to get these things stronger. Biotech, to my chagrin, because this is one of my larger holdings, although it was larger before, broke down below the moving averages, and I thought it was cooked, and then it had a nice recovery day Friday. I apologize, Wednesday. Biotech needs news. It needs new approvals. It needs acquisitions. And I should have thought about it. This is not a great time of year to be in biotech for the last week of the year because you don't get a whole lot of FDA approvals or acquisitions during the week. Pharma looks better. And probably the reason for this is unlike biotech, and if you think about it, if you're buying a company whose drug is not yet approved, how do you price it? You price it based upon sales projections, potential earnings projections, and those are very dependent upon drug pricing. With Trump targeting price of drugs as enemy number one, there's going to be a lot of pressure on anything that's priced based upon their ability to price something in the marketplace. Big Pharma has cut a lot of deals with Trump already, so maybe it's baked in more. That might become a bigger issue for biotech as we go forward. Now, typically, we're about to enter a happy hunting season for biotech takeouts. The JP Morgan meeting starts around the 15th in San Francisco. It's an annual science or a healthcare company, healthcare investor seminar. Every major company in the healthcare space presents. I go almost every year. It's a big ripoff that you can pay $1,500 for a $400 hotel room during that week. But there's M&A occurs going into and during that week. Data centers holding barely. And then, to me, one of the hardest things to constantly make money in is these quantum computers. They gave you a great trend here, and then they've just been all over the place, and they teased us back here and dropped. So not a lot to love here. All right. So in my mind, it is probably a time to be very cautious, very defensive, and start to think about offensively to the downside. In the JH layout, I'm not going to spend much time talking about stocks because I have a lot of concerns here. That could change on Friday, but Friday is going to be, I'd expect, another low volume day. I'm not even going to look at the top down because I don't want to give the impression that I'm looking to go long a lot of things. A plus, there are none. There were a couple of A's, I believe. These are two of my favorite scans. Axisome, remember I talked about there's not much news. I think this is why biotech was up. Axisome is a company that I hate to tell you when we started talking about it, but Kathy could validate it because we both got it when it's in the 30s and 40s. And I've been in and out of it a few times. I kept thinking it would be taken over, but it just keeps getting approvals or good news. It had good news on Wednesday that they were filing for another drug, and that means new incremental revenue. It's an expensive stock. If you look at fundamentals, it still doesn't make money, but it's got revenue. Its market cap is 4 billion. I still think there's a premium baked into this guy for potential acquisition. If you look at where it's come from, I mean, not a hard looking chart when you look at this as a monthly chart, certainly if you go back to 21. Um, but if you even further, and this probably was a lot of COVID stuff in here, but this is a company that, good news, probably moved the entire sector up some. Do I buy it up here? My gosh, it's high jumps at 100, I bet. I'd expect it to pull back a little bit, and then I look to think about it. I don't know if CYTK is a takeout. I don't think so based upon the chart, but then I thought I heard about something along those lines. And I see a lot of lawyer stuff when I go through. Typically, the lawyers get involved somewhere. I saw lawyer stuff. Lawyer stuff. If there's a takeout and they don't think they got enough money. I don't remember if that's the case. I do think it's the case, so I'm not going to go too deep in it. Do your own research. But this thing held up well considering, and then DENN, that one is a takeout. The nice thing about if you're holding a takeout waiting for it to be taken away, unless the takeout doesn't happen, they don't budge much on a bad market day. I usually sell when it gets up into this period. Lastly, I'm going to just look at the contra ETFs to see if there's anything that says I should be going into those right now. For those that don't know what a contra ETF is, it's an ETF and it can be tied, and of course, they're not showing today. Yeah, there's something going on with the data. Well, the contra ETFs, I'll just go through them. They are an ETF that, for example, if we look at the diamonds, this is the regular ETF of the Dow. And as we showed before, it's pulled back some. Now, if you thought this was going to drop a lot and you're in a long only account, you could buy DOG, which is short the Dow. And so this will go up. This will go up when the diamonds drop. Well, notice the pattern. You don't buy these and hold them. Markets over time go higher, but they can get big moves if the market sells off. And you can buy leveraged instruments. So this is starting to move. To me, I don't get heavy into these things until they get above the 50. But this, if I think the market's going to roll over, if you look at the Q, NASDAQ, top 100, what if it breaks down? How can I play that to the long side? I can look at SQQQ, short the Qs. Again, is this moving yet? Starting to get close to that 50, a break above the 50, that might be interesting. All right, what about the S&P 500? Well, we know that SPDR is the ETF for long the S&P. I talked about how it looks worrisome here. A break above the 50, could it run all the way to 200? I hope not, but it could. Well, I could look at SPXS for short. And hold on, SPXS. Oh, all right. Sorry about that. Bring it back up. All right, so let's look at SPXS for short. This goes up when the S&P 500 drops down. And again, for all these are different leverages starting to move, but you have to be careful. They are short moves and you got to get out. And then lastly, if you're interested in small caps, IWM, talked about pulled into the 50. If this breaks down, you want to look perhaps at TZA, which is a leverage 3X sitting down here. I'm not advocating these right now. I'm not suggesting you do them if you don't know how they trade. I do some research, but I think we have to start thinking about protection to the downside. On that note, I'm going to thank you for joining me today. Again, thanks to those that joined me at TickBlaze webinar on Tuesday. Those special prices, avoid the price increase of $14.95, are good through Monday at 11 p.m. and then it goes to $26.95. And if you like to learn more and see the workflow, think about joining us on Saturday morning at 11 a.m. Eastern for my Jumpstart webinar. Thanks, everybody. Happy New Year's.